You are listening to ChartingWealth.com for Tuesday, the 18th of August, 2015. Let's jump right into the training, then we'll get into the trends. We're looking at gold, GLD, which is the Spider Gold Trust. It's an ETF. It tracks gold, actually 10% of gold. The price of gold is reflected as 10% of what it's trading for in the open market. So it's a great way to participate in gold's up and down moves. Up moves you buy it, of course. Down moves you sell it. You can also, if you're a sophisticated buyer, you can also buy the reverse. That is, you make money when gold goes down because that ETF goes up. But this is GLD. It's an easy one to remember. Just take the O out of gold and you have it. What do we have here? This is what we want to talk about. You ask questions about how to draw trend lines. Remember, it's top down, bottom up. So we have the price of gold going up, and we have a trend line where we connected the candle on the 10th of August and the candle on the 12th of August. We've had up movement on the 14th, and then as we started the week on Monday, we have a candle that shows up movement on the 17th. Now the market is well above the 2-day trend line we drew from the 10th and 12th. So what do? You can leave your trend line as it is, or you can follow the uptrend, which I prefer to do. I'm going to go and connect our trend line from the 10th to the 14th. Now the problem with that is we violate the rule on the trend because we're bisecting, well, not truly cutting it halfway into, but we are cutting through the candle on the 12th. So that is not a proper trend line. So we'll need to move it to the 12th, start there, and then draw it to the candle on the 17th. I feel comfortable doing that as long as it is a green candle. If it were a red candle and we were trying to draw a down move, that would violate the whole idea of a trend line. Now, we did have a red candle on the 14th, but we're not drawing our trend line to that. And in fact, that 14th candle is above our trend line. So that is fine. If the candle on the 14th had come further down and penetrated our candle, our trend line, that candle had penetrated it, that would not be a good trend line. And you might say, what are trend lines for? Well, if I had only one type of indicator, one type of tool that I could use in investing, you told me I could have nothing else but my candlesticks. That is price movement. I could draw candlesticks on anything as long as you gave me the opening, the closing, the high, and the low. I would then want to draw a trend line if I did not have the ability to draw the MACD or to use the derivative oscillator. I would use a trend line. What does a trend line do for you? Well, it shows you the up movement, the down movement, and remember again, when the trend is going down, you draw it from the top. So it's bottom up, top down. And when it's from the bottom, you draw it up. Now, what you're looking for is you're waiting for that trend to be broken. And a lot of times that broken trend will actually give you a much better feel for the fact that the market psychology is changing and you can get out of a trade that you might lose money on that didn't go your way necessarily, or a trade that's already run all the way through, and you can take your profit and jump out and enjoy it. What we have now is an uptrend in gold. If we go, that's the 2-day chart that we're looking at right now. If we look at the 4-hour or the half-day chart, we can see that our 2-day trend line, the movement in gold, is still well above it. Now, gold appears to have peaked out sometime in the afternoon of the 12th. That was Wednesday, last Wednesday, the 12th of August. It actually hit the top of the Bollinger Band on a second day and then opened up the next morning and has basically moved sideways since then. Technically for the day it was up 0.26%, but if you're looking at the chart, you can tell how it's moved sideways. It has not gone anywhere near the high that was reached back on the afternoon of the 12th. And it has not gone below the low reached, where it started that afternoon. And we're still above the 2-day trend line, so we feel comfortable still being in this trade. We've not violated our trend line yet. However, we do see signs, potential early warning signs, that the trade could be running out. On the 4-hour chart, it started on the 27th. It slid sideways for quite a while as the MACD gained energy, and then starting around the 6th, we saw where the derivative oscillator started to gain energy, and then it's topped out and has reduced and lost a lot of that energy, and we see a coming together, a converging of the MACD, which is the blue line at the bottom of our chart, and the red signal line, which might be signaling a crossover going down. Now again, that's on our short chart. Once it violates our 2-day trend line, then we want to go back and assess our 2-day chart, see what we see going on there, and make a decision whether we wish to get out of that purchase of gold moving up, or perhaps sell half of that and then be playing with the market's money at that point. A lot of decisions have to be made, but at this point, we're up in gold. Now let's go and look at our other charts. We're going to start with IYY. This is the total market. What is it doing? Well, we had a 2-day trend line that has been broken as of the action in today's market. Well, the candle on the 17th, and we have up movement. If we look at the 4-hour chart, we can see that movement starting back on the 12th, crossing over on the 14th, going up, and as of the morning of Monday, it actually breached through. That's Monday the 17th. It breached through the 2-day trend line. It already crossed over on the 14th in the morning, and it moved up substantially more during the course of the afternoon. So the 2-day trend line has been breached. When we look at the 2-day chart, we can see that it has breached also. And again, when we look at the total market, we can see that it has been sliding, well, sideways. It's been in a fairly tight range. It's still not even, as it ended the day today, as high as it was back on the 29th, or even the days following up through the 10th. So the market is slipping back and forth sideways. It is the summertime trading zone, as we talk about a lot. The market tends to be much more thinly traded because the big money has gone away for the summertime and has not yet come back in, something that we expect, and a lot of traders stay out of the market in the summertime because of the sideways movement, the summer doldrums, the fact that folks have sold in May and gone away, come back to trade another day, and that is once the fall-winter trading zone kicks in the next few weeks. Until that happens, the market tends to be thin, and you can have this kind of action. But again, there are people who love trading this kind of market and are good at it. We'll continue to talk more about that. Now, let's go back to our 2-day chart, and we will go to SPY. SPY, again, as we talk about, looks somewhat similar many days to the total market because it represents what? The Standard & Poor 500. This is another ETF. It broke through the ETF as of today, broke through going up as of the Monday the 17th. And if we revert back to our 4-hour chart, you will also see that upward movement in the morning, and then substantially more upward movement in the afternoon after the MACD was breached or crossed over going up on the 14th. That again is our short 4-hour chart. So we've breached that, and it's an up movement on both the total market and the SPY on the 4-hour chart and the 2-day chart. Now lastly, we're going to go back to our 2-day chart, and we're going to pull up the Qs. What is the Qs? Well, it's the NASDAQ 100. That's what this chart reflects. We had drawn a 3-day trend line, a 2-day trend line. We'd drawn, almost had 3 candles connected. It is almost breached, but if we redrew our candle to be a little more accurate, we redrew our trend line, which I'm doing right now in front of you, we would see that actually as of the 14th, there was a breach in the 2-day trend line, and today simply confirmed that. However, it is still in a down move as of the 2-day chart, so the crossover going down on the MACD has not been broken yet. The derivative oscillator is losing some speed. If we drop back on the Qs to take a look at the 4-hour chart, can see that it actually pushed through the 2-day trend line as of today, crossed over going up, but again, we don't have that confirmed. So Might keep an eye on the 4-hour chart, see if it loses its steam quickly and then moves back in the direction of the big chart. If so, you might want to consider playing that downtrend. Again, in a virtual trade, we don't give advice on real money because we are simply an education site. We are not a stock calling service and do not take responsibility for any trades, but we do encourage you to open a virtual account at any of the online brokerage firms. You can do that. I'm not aware of any of them that even charge for it. And you can practice all that we talk about here. Please be sure to go to our website, listen to the training that we have there. I'm about to finish up a wonderful short training that will be available for folks who are seriously interested at no cost so that you can go through a short course and actually learn everything you need to know to start doing your own practice trades and learning the market. The way that you learn the market is you put some knowledge to use and then you develop your own trading system. That's what we like to see folks do. You learn, you improve, you change, you roll with the market. That's what we're all about here at chartingwealth.com. Please sign up for our newsletter. Join us on Facebook, Twitter. Provide us with your comments. We love to hear from you. We so much appreciate you joining us. We hope that you have a great day in the market on Tuesday the 18th and that you have a great trading week. God bless. The best of investing we wish to you from chartingwealth.com.